Hey, what's going on? Welcome to the 500 strategy. Today, I want to help you guys achieve financial freedom with simple trading analysis, simple trading strategies explained. And today we are looking into how can you spot early on a trend reversal. Maybe your strategy is based on the reversal of a trend. Say we were coming down from a downtrend and you want to catch the move as early as possible to have a nice long. Or maybe you're looking for the reversal of an uptrend and you want to catch the downtrend. How would you do that without being faked out? This is what we're going to be looking at today. We are on the 1 hour chart on the Forex pair British pound versus US dollar. Let's assume that you wanted to take a trade here in that area when price was there. What are we looking at? Let's break it down in simple ways. The simpler your chart will look, the better. Number one, when you want to trade a chart, make sure that you understand the chart. If the chart looks too messy to you, and you don't understand price action, you are not able to spot market structure easily, support and resistance levels, and how the price is reacting with those support and resistance levels. If you don't understand those things, please move on to the next chart. You are not ready to find any clear setup and you will wreck your account. So you want to make sure that number one, you find an asset that you do understand. Price looks clear and obvious to you, and also you're on the right time frame. Sometimes it's changing the asset, sometimes it's changing the time frame. Now, when it comes to those trend reversal, let me give you a few tips that I do apply myself in my trading strategy, what works for me, and I want you guys to benefit from this entirely for free. Number one, you want to make sure you do identify the trend. Since you're looking for a trend reversal, then that means that you do identify a trend clearly. And the key elements of a trend are, well, it's following a trend. So let me here highlight this trend right here with this trend line. If you have a trend either to the upside or to the downside, this trend will follow what we call a trend line. All right, so you want to make sure that this trend actually respects some key levels on the same straight line that is a trend line. We have one touch, two touches, almost a third one here, but we do have a third one for sure here, and then here when it finally breaks down. So this is the trend line. How do I trace my trend lines? I always make sure personally that my trend lines are connecting the most extreme tips of the wicks that you have on that trend. It is technically correct to trace a trend line, say from here, and to go through those areas here because you do have more touches and it does still respect a trend. It's okay to go through some wicks and to go through even a few bodies as long as you do have those touches that confirm a trend line. However, I personally advise to you that you would connect the most extreme tips of wicks. The reason why is because this will be your cleanest trend line and you will make sure that you avoid being faked out when you think that price is actually breaking the trend line. So by respecting those most extreme points, you're ensuring that when it does break out for real, this will be your best entry. The next thing you want to identify is market structure, which responds to support and resistance levels. Historically, if we were looking at the left side, we can see that, of course, this is support, but right now we'll trace our support over here. You do see that this was a strong support with a double bottom. In the future, it will actually respect that support level again. So this is our starting point that started an uptrend. This is my support level. touched twice, double bottom, and now we are starting an uptrend. This uptrend will stop here at this top that will mark over here. And this is where you start looking at an opportunity, a setup for a trade. If you're here at this moment and you see a beginning of a reversal, you will want to look for a short opportunity. So how do you spot the fact that this is about to be a reversal of a trend? Well, you need to look at a few elements. Number one, we are reaching here a first top, and then we have a second attempt at the same level. You see that there is rejection. There is a shooting up here. However, this created a long wick of bearish rejection. So now you're able to identify your resistance level. We do now have a support level and we have a resistance level very clearly. When price got rejected here, you can start thinking, okay, I may have potentially a reversal of trend, but it is not yet confirmed. So you need to wait until price comes down and tests that trend line. This is where you need to be careful not to be faked out. Price breaks down from the trend line. And this could be your signal now for a new reversal of trend, and you can be looking for a short opportunity. However, make sure that you understand that once it breaks down, it will most often retest that level here. So you need to let price do its job. Even if it was going a bit lower, you need to let price come back again and retest that trend line to confirm it as resistance, not as support. The second thing you want to look at when price comes back for a retest is, do you actually have a supply zone that was created in the process? Because right now, when price went down, it did create this area here that I will mark as supply. And can you see how price not only had to retest this as a resistance, which it broke through again, but it went higher because there was a vacuum here. There was a gap to be filled. And so this supply zone with its order block over here that was created with this rejection had to be tagged. And you see how price beautifully tagged this supply zone before confirming a move to the downside. So now structurally you do have one, two rejections, another test, but it got rejected in the supply zone without even being able to reach that new resistance level, and price broke down again. So now your trend line was broken for the second time, but it was broken after a valid retest. This is when you can actually start entering at this level. Place your stop loss above this lower high level and let it run as long as necessary. If you choose to do so, you could maybe choose a ratio of 1 to 2, or you can just let price continue as long as it works for you. That would be a beautiful short trade. Now moving on to this new trend that was created, we're looking again at identifying this new trend. Again, we're going to connect the first wicks when they appear, but you got to be careful. This would be valid. You would be looking at a downtrend. Let me change the color here for clarity purposes, and you could still look for a long opportunity here, but you got to be careful. Why? Because when the trend line is really steep like this, it means that this is not your main trend line. This means that there will be a bullish correction for a little bit to retest a new resistance level. However, you want to wait for that correction to end and look for continuation. That way, your trend line will be a lot less steep and a lot more valid. So now we're finding new areas of resistance, confirming that we have now this trend line, clean trend line for our downtrend. Notice how I am once again connecting the most extreme tips of those wicks and having the cleanest trend line possible for this move. That way, when we come back to test those lows level again, we find this old support that we had here. We do find support at this level, rejection again, another test, a double bottom again. Price comes back to retest our trend line and to break above. Once again, we do have a need to retest the trend line. This retest was successful over here. This is not an area where I would have entered a long trade. Reason why is because there was a lot of demand over here, and most likely price would have been coming back to test over here. I would have most likely waited for price to come back here. However, it didn't do so. It kept on going. So in those moments, you have to be okay with being out of the market. You just simply wait for price to come back and retest the next support level, which coincides to this one over here at the retest of the trend line. This rejected, and you could find a new support level. Therefore, this is an area where potentially you could have been looking for a new trend to form over here in green for bullish, and in that area you would have been able to look for a potential long, again placing your stop loss under the wick of that rejection and letting your trade run for a little bit. Again, you can choose 1-to-2 ratio or 1-to-3 ratio according to your strategy, or simply trail your stop loss as price goes. Price went down again for a new downtrend, because actually this was more of a downtrend that you could initially think. It was a bigger downtrend continuing. However, there was a play to do here in intermediate trends. Hopefully that video was helping you to identify some trends and some trades opportunities. If you like and if you want more, please like and subscribe. That will help my channel, and I want to help you guys achieve financial freedom.